Okay. Folks, welcome to the special Super Bowl edition of Sunday Night Futures Live. Welcome aboard, everyone. And tonight, what we're going to go over a lot. And we're going up against Super Bowl Sunday. I don't expect a big crowd tonight, but if you're catching this on the replay, hope you enjoy it. And go Cincinnati. I'm sorry, I'm going with Cincinnati on this one because I don't like the governor of California. So, what we're going to go over tonight, futures, obviously, eco data, valuations of the market as we do every Sunday, headline risk, what's going to impact the market this week, and there's a lot of it. Well, I'm going to do some analysis on the S&P 500 and the NASDAQ VIX, which is the VXN. We're also going to take a look at our strategy. For the most part, I'm going to have a bearish tone tonight, folks, and it's going to be, I'll back it up with charts and the reasons why I'm bearish, but I'll also tell you about how we're trading this market and how, despite a very rough market last week, we did very, very well, and how we're doing that and how we plan on continuing to do that into the future, because if you think that we've had a weak market of late, we haven't seen anything yet. So buckle up. I'm going to talk about Bitcoin as well, and there's some advertising going on tomorrow. I'm going to share with you what I think is going to play out with Bitcoin, and let's get started. First, let's go to comments as people populate in here. Falcon, hey brother. Rick Roofing. Giving slight edge to the Rams tonight, Bob? Okay. Hey, Steve. Talon. Even Bob, you're competing with the Super Bowl tonight. Yeah, I got. It's rough. It's going to be a rough one. I think we're going to pull it out. Rick is one of the knights who say knee. Is that a symbol? I guess it's a symbol. Where's my pen? Here's my pen. Okay. Jeff, I'm not sure if Jeff is out there. I have your symbol, LW. Let me check the members area to see if anybody else populated symbols. No, we're good. Okay. Louis, hey, brother. Happy Sunday, Bob. Happy Sunday to you. What about Equix REIT market? We'll take a look at it. Monty Python reference. I loved that when I was a kid. All right, let's get to it. All right, so the futures market's open. Tom, hey Bob, last week affected by market, no war. We're going to talk more about that. We're going to talk more about that in a moment. I'm glad you brought it up. Okay, so the E-minis are open. Yeah, we're going to go over Tesla. We'll go over Tesla. E-minis are open. We are now flat. We were up, and now we've reversed a bit. We're going to set up an alert here. This is a 30-minute chart. I want to know if we break to new weekly lower lows. I think we are. Maybe not tonight, but very, very soon. Okay, that alert is set. Let's go to, we'll stick with equities. Small caps. They are down. We closed out the week last week right at the weekly lows. Let's go to the NASDAQ 100. Not wonderful. I hate when I do that. God damn it. There we go. There we go. This is correct. Now we can go. Okay. So either we are going to hold with a higher low, or we break, or we break out to new higher highs. I mean, that's what it comes down to. I think we break down. The one caveat I will say here is that we have RSI on a 30-minute time frame at 21.88. So if they do knock it down tonight, we're probably going to counter trend rally tomorrow morning. But I think that rally is to be sold. Let's move on to the U.S. dollar, because the dollar last week, folks, it broke out on a weekly time frame. A very serious move. It was a reversal week. So despite that, you saw gold, the gold stocks, silver, the silver stocks, they didn't care. Oil didn't care. It just continued up higher. And that is a big change. It's a sea change where you have the gold stocks and gold completely ignoring the strength in the U.S. dollar. That rarely happens unless, of course, there is geopolitical fear. Geopolitical fear, and both will rally together, but it usually doesn't last. So with that in mind, the dollar is pretty much, it's down from the closing bell from Friday. So this is inaccurate. This has, I don't know why this updates later on this evening, but this is not going to stay the same. We're down from the closing price on Friday. So with that, I suspect that we should see some strength in gold. We may see a retracement a little bit because it was such a big week last week. We closed at 1860. Yeah, we're pulling in here a little bit. Now I'm going to talk a bit more about that that correlation, which rarely occurs, gold and the dollar, in a moment. So stick around. Let's go back to the 30-minute chart. Let's take a look at silver. Silver, we're long of silver. We're long of the silver stocks. We're long of the gold stocks. It was a really good week last week. I had silver up. Here's silver. This is inaccurate. It's pulling back slightly from Friday's close. Sticking with the commodity trade for a moment, folks, because this is where we want to be. Copper is, it looks to me to be up. These quotes are all messed up. It's showing down, but it looks up to me. Home heating oil coming in, but for whatever reason, it's showing up here. The quotes are all wonky tonight. Where a little bit of topping action here on home heating oil. Lean hogs looking very, very strong. Let's go to the weekly chart here. Protein prices are very high. I mean, I took a look at cattle prices earlier, and they were very, very strong. This is a weekly chart, 30-minute chart. We pulled back on Friday. Looks like we're putting in a higher low here. And we should expect to see a continuation move up higher. The reason why I pulled back was probably the strength in the US dollar. Sticking with the commodity theme, oats up on the session. Soybeans. Let's go to the weekly view. 30-minute view doesn't do it justice. Soybeans have been in fuego. We hit the upper band of resistance here, so we may get a pullback. We're leaning into, on a weekly time frame, the third standard deviation Bollinger Band. For those not familiar with what that is this line here in red. I'll save you the technical jargon. We're not supposed to be there. So we could stay there for a little while. We've already spent a week closing above it, another week teasing it. We're probably going to get a retracement fairly soon. Let's go back to comments. Getting more people come in. Hey, Kat. Yeah, black gold is very concerning. We'll go over a chart of that in a moment. SBEV has absolute momentum. Okay. Eric, gold closed above 1850 last week on the charts I've seen. Seemed different than your chart during the week ahead commentary. I'll go back and check. It shouldn't have. I mean, I think we closed at like 1860, if memory serves me right. Well, everyone is missing you out on LISU. Okay, I don't know. What's LISU? Is that Long Island something? I feel like an idiot now. Bitcoin's dropping. Yeah, I have a theory about that. I actually got it from Peter Schiff, but it plays into a longer term trade that I have for Bitcoin. And don't get me wrong, unlike Peter Schiff, I believe there's a place for Bitcoin. He believes it's a Ponzi scheme. I don't necessarily believe that. Yes. Suka, I'm trying to get your name right. Like the video, please. It helps me out with the YouTube algorithm. Please. Thank you very much. Is Zim dip buyable? Big Dibby coming up. Last I looked, it looks like it was breaking out. I'm surprised to hear that it pulled back. That was a few weeks ago, though. Does Russia invasion affect shipping? It affects everything. It affects everything. Some bullish, some bearish, mostly bearish. Bullish is going to be probably initially bearish for the transports, but names like Zim will bounce back because they'll have pricing power. The risk is going to go through the roof. You got to have shipping. Energy is going to go through the roof. Tech is going to drop like a rock. You'll see multiple compression in a very, very big way if war does break out, and cross my heart and prayer to God that it doesn't. But it seems like we are really looking for it. Okay, let's move on. I want to take a look at Bitcoin for a moment. So it's dropping, yeah. That's the weekly chart. Oh, look at this. Look at that. They're already taking it down. So I did a presentation for TrendSpider, and they wanted me to talk about how I trade, or they wanted a macro view on Bitcoin correlations and whatnot. And so I said, okay, I could do it. I have plenty of correlations for Bitcoin. There's a myth out there, and I wanted to bust the myth that there are no correlations for Bitcoin. So I did that. It's premiering on the 26th, and I wasn't prompted to do this, but I said, listen, there's a short trade to be had here. Do you want me to share it? And they said, sure, whatever you got. So I left it off, and I know that some people aren't going to be happy with me, but I'm short-term bearish on Bitcoin. I'm still standing by my 29,000 price target, and we have a trade that I'll talk about later on that will help you to trade Bitcoin to the short side, and that's going to be with stick around. It's a tease, as we say in the entertainment game, a tease. So stick around. LMT, GDC are all good. Okay. 42,000 support. Yes, that seems reasonable. Okay, let's get to it. All right, folks, got to pay the bills. And our sponsor tonight, TrendSpider. Automate your grunt work, speed up your technical analysis, and improve your accuracy while all the while timing your trades with precision. How do you do that? You use their AI, their algorithm, to help you identify support and resistance levels with the click of a button. Also, you time your trades with precision by using their trade alerts. I'm going to demonstrate it in a little while. We have a bunch of charts to get to, and I'm going to demonstrate how I use it. Reduce costly analytical mistakes by, forget about social media influence or the slick back, well-dressed thugs that come onto financial news media each morning. Use their alerts. Set your strategy over the weekend, as we did yesterday. And by the way, I started releasing premium content with our market wrap. I'm going to release last week's, the weekend commentary tomorrow. Not this week's, but last week's. For those that are interested in joining up and you're like, all right, I don't know what this guy's all about, check out my unlocked video premium video, and you see what you get as a member. So back to TrendSpider. Folks, there's a link below. Get a 35% discount code. Cheapest price on the web. That's the price they give me. You get that advantage. Head on over. They have a 7-day free trial offer. Watch their demo tour. I have a 14-day free trial offer, and I give it away free for silver and gold level members, both monthly or annual. Doesn't make a difference. So take advantage. They have a bunch of great videos here. Their support team is outstanding. They will never leave you out on the lurch. If you have a question, reach out to them. They're growing leaps and bounds. So this software has been available to institutions for a long time. TrendSpider has made it available to the retail trader at a reasonable price. A lot of your competitors out there are using it. They may not want to admit it because they want an edge. They are using it, and they're growing leaps and bounds. So take advantage of the 35% discount code. Let's get to economic data. All right, so tomorrow, guys, you want to enjoy your trading? Make sure you get your wife flowers, a card, maybe a couple of chocolates. All right, it doesn't take much. A little bit goes a long way. Remember it. Don't get in trouble. All right, tomorrow we have Bullard coming out. Bullard helped to tank the market last week. So this should be interesting to see what he has to say tomorrow. On Tuesday, we get the producer price index coming out, and that is the measure of inflation at the producer level. Remember, and we're going to talk about inflation in a moment, how they rig these numbers. The producer price index measures the pricing or the inflation at the producer level. These folks are now pushing it forward to the consumer. They're no longer absorbing these prices because inflation is not transitory. Empire State Manufacturing Survey, retail sales, a big number on Wednesday. Very important. Industrial production, important. Capacity utilization. Business inventories have been on the rise, not for a good reason. Companies are hoarding. They're hoarding goods because they're worried about inflation and supply chain disruption. So if there's something that they need to buy now and it's available, they're buying it now, locking in the price, and they're taking out of the equation the unavailability of that product in the future and a potential price increase of that product in the future, which is highly likely. So they're buying up those goods now. But if demand diminishes, that creates a problem because if they can't get rid of those inventories, what do they need to do? Price cuts. We get the FOMC minutes on Wednesday. That's definitely a market mover. Thursday, initial jobless claims. Folks, they came out at about 233,000 new jobless claims last week. Let's get an accurate number. 223. So we had non-farm payrolls come out with an increase of 447,000 new jobs the week before last. We're still losing 223,000 jobs per week. Non-farm payrolls comes out once per month. So multiply 223, which is a low number, times 4 months out of the, usually 4 weeks out of the month, you still have net job losses. We're losing jobs in the economy. So Friday, the PCE, this is the Federal Reserve's, this comes out next week. Friday, sorry about that. Leading economic indicator just comes out by the Fed. A lot of Fed heads coming out this week. Bullard again on Thursday. This is going to be a volatile week. Philly Fed manufacturing index. Buckle up, folks. It's going to be a rocky week. Okay, let's talk about valuations. Valuations, we go into the week overvalued. We were at 1.9 standard deviations overvalued relative to the historical norms. That's this rising support level here, the historical trend line. We remain overvalued. In fact, 56% overvalued relative to the historical trend line. So while the markets are weakening, they are not cheap. Don't listen to people saying, buy the dip. You don't buy this dip. We no longer have a Fed put. So what does that mean? It means multiple contraction for high beta stocks. They're not going to be able to sport the PEs that they once did because they're not making money, many of them. So be careful of your small and mid cap stocks and some large cap stocks that aren't making money. You're going to get multiple contraction. The Shiller PE ratio, we still remain very expensive. Second highest since the dot-com bubble at 36.17. Very expensive. The median is 15.87. The mean, 16.92. So we're not far from being double the valuation of the historical averages. Earnings this week. We're going to be continuing to do earnings trades. Normally during earnings trades, we don't buy options. We sell premium strangles. We've taken a different approach this season because of the volatility of the market, because strangles are undefined risk, especially to the downside in this market environment. So we've gone 2 standard deviations beyond the expected move to the call side, selling naked calls, or using iron condors, which is a defined risk strangle. I'll go into that in more detail. I won't bore you with it if you're not interested. But we will still be trading earnings. We did well last week. I suspect that we will trade a few names going into this trading week. Shopify, One, NVIDIA, AMAT. I don't know if I'm going to do both NVIDIA and AMAT. That's a lot of risk. Possibly Airbnb. Depends upon the pricing of the options. We got to get paid for that risk. If we don't get paid for the risk, we're going to walk away. That's it. We have done far fewer trades on earnings this quarter than prior quarters because sometimes we're not getting paid for the risk. We want to go deep out of the money, way out of the money on these stocks, so that we can avoid having our put and our call side tested. Roku, a maybe. Yeti will check out. I never traded that one on earnings. Shake Shack's a possibility. DraftKings a possibility. And that's about it, I think. I'll check out NASDAQ market site for other. Oh, Advanced Auto Parts. I have traded that one before, and that's an okay one to trade. Non-tech, right? It's not a high beta stock. So that we've done well with trading medium to low beta names. Beta meaning volatility. We want to avoid high volatility stocks, because if they're very, very expensive, if they disappoint, or even if they beat on current earnings and revenues, their forward-looking guidance is a bit iffy, they tank. So we want to be very, very respectful of this current market environment. Moving on. All right, so here's what scares me about this week, and this is not political. Bigger than Watergate, I'll leave it at that. The Durham spy scandal is going to be a major, major headline event. How the major news outlets are going to avoid this? Well, they're just sowing the seeds for their own demise by ignoring it. Other media outlets are picking up. They are running with it. They're going to get the eyeballs. They are the new media. So what does this mean for us? Well, when you have an administration which has horrible policies that are not appreciated by the American people, poll numbers are in the gutter and sinking. When your policies are disappointing and your poll numbers are horrible, try to stoke nationalism. That's why you're seeing this. Ukraine, all over the place. War, 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 the drumbeats of war. We have no business being involved here. There's probably nothing. This is probably a wag the dog situation. We are probably, I don't know for sure, but it seems as if, from a blue-collar perspective, that this is a major, major distraction. However, it's a high-stakes game. If the major media news outlets pick up on this, you got to expect that this is going to become a big, big factor as volatility plays out. And I mentioned earlier that gold and the US dollar rarely rally in tandem, except for geopolitical risk. Now, apparently, somehow or other, the Biden administration has become very confident that the 16th of February is the date that the Russians will invade. Who knows? Be careful of being aggressively long of the gold stocks on the 17th if that invasion does not play out. Because if the dollar remains strong and this becomes less of a concern, you may see, short term anyway, you may see a weakening of gold because it's a risk-off play now. And you're going to have a risk-on trade in possibly some stocks. And what the best case scenario for traders that are bullish on gold is that you see on the 17th the dollar weaken, yet gold still catches a bid. That is a best case outlook, because the concern goes away from Ukraine and back to horrible policies stoking inflation in the United States. So, speaking of inflation, this meme perfectly captures what I try to articulate in my long-winded way, admittedly, about the Federal Reserve and how they're fighting inflation. They're not fighting inflation. They are still, the analogy I like to draw is that your house is on fire, God forbid, but the fire is inflation. You call the fire department. That's the Federal Reserve, God forbid. the fire department shows up and they take the hoses out, they open up the spigot, and rather than shooting water on the fire to put out the flames of inflation, they are squirting gasoline onto the fire and making the problem worse. We are still in that phase. They are still buying bonds. And until they stop buying bonds, as they promised in March, this is only going to get worse. They have not yet begun to fight, and they've known this is a problem for months now. Months. So Tom Hanks here, with his 45 caliber sidearm, is a 25 basis point rate hike compared to a 7.5% CPI. Folks, you need to have the Fed funds rate. That's the borrowing cost for banks that the banks pay above the rate of inflation to get inflation under control. So right now, CPI, which is a rigged number, it is not the same number as they calculated back in the 1970s and 80s. I'm going to show you it in a moment, the real inflation number. So this increase of 25 basis points, half point, 2 points, 3 points, I don't care. It's not enough to fight inflation because they can jack it up to 3.25% at a 0.25%. It's still below 7.5%. It's too late. Where is inflation exactly? If you use, this is off of Shadow Stats. I'll share this with you. You may want to bookmark that. So here's consumer inflation official, which is the current state, versus Shadow Stats 1980 based alternative, meaning the way it was calculated back in the 1980s. That's the true way. So here is the CPI current, accurate at about 7.5%. If they were to measure inflation the way they did back in the 1970s, 1980s, inflation would be now above 15% annualized. This is the real number. If you want to be intellectually honest and not intellectually dishonest, you got to use this number. Why? 33% of the CPI is made up of rent. But you remember that the Federal Reserve said that inflation is transitory, meaning temporary. When does rent go down? Rarely. Rarely does it go down, especially after you had rental locks where people couldn't evict people for almost 2 years. They got to get that money back. Rents are not going down anytime soon. But the way the Federal Reserve calculates it is not the way you would think. They don't go to the landlord and say, listen, how much are you charging this year over last year? No, no, no. They don't do that. They use the owner equivalent rent. They call up a homeowner. Hey, what do you think you can get rent for on your home? I don't know, guesstimate. And they use a formula and they underestimate the rise of inflation in the CPI. So if you want to know why these numbers don't match up, that's one of the reasons. If you add in their hedonic adjustments and whatnot, they don't, like suppose back in the 1980s, they said, okay, we're going to measure meat prices. And then in aggregate, they said, okay, pork and beef are going up X amount. So now they'll say, okay, we're going to measure beef. And if it goes up, you got to make an assumption that they'll stop people, the consumers will stop buying beef and they'll buy pork, which is cheaper. And they manipulate the numbers. Those are hedonic adjustments. So say that to your bookmarks. It's valuable information. Shadow Stats, shout out to them. Good work by them. So let's take a look at the S&P 500, where I think it's going this coming week and in the next several weeks, because it's not a good thing, folks. It's not good. All too long, we have been in a bull market subsidized by the Federal Reserve and most recently by the federal government. Joe Manchin, Kristen Sinema put the nail in the coffin of all these big spending bills that were going to be financed by the Federal Reserve. That's gone now. Now the Fed, in an election year, has to choose stock market or inflation. They're going to choose inflation. Why? It's because everybody is not in the stock market. Inflation is a tax on everybody, but mostly those people at the lower end of the income scale, and they may not even have an income, but they still are able to vote. So those folks are going to be very, very motivated this year to get out and vote because they don't have enough money to buy groceries or money for clothes for their kids. They're going to be very, very motivated. So the Federal Reserve is going to have to choose stock market or inflation. There will come a point after the stock market corrects very, very hard, where it's probably going to happen after the election, where the Federal Reserve, despite inflation, is going to come back in and they are going to ramp up the printing presses more than what you have ever seen before in your lives. They will be back. But right now, it's inflation that's motivating the market. Have no doubt about it. And when you take a look at the S&P 500, this is TrendSpider, folks, 35% discount code below. Here, I want to illustrate something for you really quick. I'm not going to make this a commercial. If you're wondering what I was talking about before about automated trend lines, meaning automated support and resistance levels, where you can set alerts at, here, click of a button. Bam, bam. You want to know where support is? You go right here. Create your alerts. We'll keep this active for a while. Our alert is set. So here's what I don't like about the market and why I think we're breaking down even further. We broke down here the week of January the 17th. This is a chart of the SPY. We saw a bullish key reversal bar the week of the 24th, continuation move up higher the week of January the 31st. Okay. The problem on this week here is that we reversed off the highs of the week. We still closed up. Fast forward to the next week where we again rallied up to this upper band of resistance. But for the second consecutive week, we were rejected. And in fact, last week, we saw a bearish key reversal. So we take our crayon out and we say, okay, where to from here? If we break down to new weekly lows and we close down below this lower band of support where I set my alert, is going to be the next price target for the S&P 500. Keep in mind, the Federal Reserve has no room to cut rates. They can only raise them. They're fighting inflation. You have Bullard, which is totally off the reservation now, with his statements about multiple rate increases, early rate increases. So they're going scattershot over there. So we are seeing a lot of trouble technically on the S&P 500. Then you take a look at the VXN, which is the NASDAQ 100 VIX. So this is like the triple Qs, the VIX for the triple Qs. You take a look at this and you got to understand a bullish chart for the VXN is a bearish indicator for the triple Qs. Now, we're short of the semiconductor sector and we're profitable. We're going to be looking to short the triple Qs this coming week. May use naked call options on Microsoft, or just the triple Qs or leveraged version of the triple Qs. Not sure yet, but more to come, members. So last week, you can see that you have your rising moving averages here. One's of the VWAP. And we flashed a bullish key reversal bar. Price target is up here at 43.83. We rejected the week of January the 24th. If we break above this mark, we're going a lot higher, therefore a lot lower on the triple Qs. Remember, these are tech names. If yields are rising, that is not good for technology. It's good for the banks to a certain point, but it's not good for technology. This is not the environment to be buying tech stocks. Energy, sure, but be careful. If this becomes no longer an issue, the Ukraine, if after the 16th you don't have Russians in the Ukraine, all of a sudden you have, the Biden administration is not going to be taken seriously. So you got to wonder how much of a premium is being priced into oil right now that may come out of oil if you don't have tanks, Russian tanks, rolling over through the Crimea into Ukraine. So beware of the 16th. Okay, gold, silver. I'm a big bull on gold. I think oil's moving up higher as well. Short term, that could be a risk-off event if, and hopefully it is. You don't want to see Russian tanks going into the Ukraine. That is a war we do not want. That's we couldn't get out of Afghanistan with our head held high after 20 years. We're going to go to war with a near peer? I don't think so. Another look at the S&P 500 I'd like to share. This was posted on Twitter, so a shout out to Vic Soylan. I don't know the gentleman, but I picked up on it. And you can see here, this is the S&P 500 weekly chart. Oh, this is actually a daily chart. Daily chart. And we can now are putting in lower highs and lower lows. That's not what you want. You buy the dip back here. When you rally, you pull back, you stair step up higher. When you start putting in lower highs and lower lows, that's not when you buy the dip. I'll share with you what you do in this kind of environment in a moment, but you do not buy the dip. VIX is down here. For those people not familiar with the VIX, what does it imply? It implies that if you're putting in higher lows and higher highs, that's bullish for the VIX. But what is that bearish for? The S&P 500. Until these trends change, meaning S&P 500 bottoms out and begins to put in higher lows and higher highs, which some point we will, but it's significantly lower prices. And the VIX breaks down and begins to put in lower highs and lower lows. Don't buy the dip, because we remain overvalued by 56% or 1.8 standard deviations beyond the historical norm. And you do not have the Fed put. So what are we doing here? What are we doing that's different from the rest of the trading community that may be on YouTube and saying, they're not paying attention to the macro view like we like to do here. We like to educate, share the reasons of why we're doing what we're doing from a macro perspective, geopolitical, macroeconomic, and we do the work for you, for our members, so that you don't have to do it. You may not be into it. I'm into it. I'm a nerd. So I get off on it. So what do we do here? Back in April of 2021, we kind of backed off of doing a lot of swing trading, and we took a different approach. And that was selling premium, selling strangles, generating cash flow. And we've been doing very, very well with that trading style. We've also been on weakness building positions on the gold stock. When everybody was beating up on gold stocks, silver, we're buying. We're buying them up because we knew that this was going to become a public conversation at some point in time. Now they're making memes about it on Twitter, and they're very, very accurate. So what are we doing? So we're trading options. We're selling a lot of premium. But what I don't do is this. I try to keep 50% of this is my trading account, folks, trading account, 50% net liquidity, meaning at any given time, I have 50% of my cash value of the account in cash. So that way, when they beat the market up really, really hard, or they beat gold up really, really hard in the gold stocks, we're able to step in and take advantage of that anomaly. We'll get the rally back. With the gold stocks, we'll keep. We'll sell covered calls against the trade. With the stocks that we buy, like PayPal, we took a loss on PayPal, clear disclosure last week. Very small loss, kept it small. We bought the dip there, didn't work out. Thank God we stopped out. And now we live to play another day. One of my favorite stocks for the coming week and weeks, PayPal. We're keeping that cash on the sidelines, and we're aware of the macro view. And this is the macro view. This is a market that is weak, and volatility is gaining strength. So what are we looking at also in this market to short? Because that's what we're looking to do. We're looking to short. Let's bring up the ARK fund. Now, funds are better to short because you don't have that headline risk, meaning you're short of a stock and all of a sudden you get an announcement they're being bought out and you get your face ripped off, or some headline event that can cause a short squeeze and you're getting your face ripped off. I like to short ETFs or like the ARK fund, where you don't have that headline risk. Why do I want to short the ARK funds? Simple. High beta names, highly volatile, lots of unprofitable names. They may have great futures ahead of them. Now is not the time. They're going to be facing multiple compression, meaning they're not as valuable as they once were. Why? Their borrowing costs are going to go up. So the past couple of weeks, we had a dead cat bounce on the ARK funds. I believe that we are seeing a bear flag setup, and the resolution to this bear flag setup is going to be a break below this lower band of support. When am I wrong? I'm wrong if they gap it up above this upper band of resistance here and it closes there. It's got to close there. Then I'll be wrong. But for now, we're nowhere near there yet. I think that we are going to roll over. Now, the one thing I will point out is that our Stokes are hooking up, but we continue to put in lower highs and lower lows. So this is just one of the ETFs that we're looking to short, along with the Trip Tues, possibly Microsoft. I just said that I really prefer not to short an individual name like Microsoft. Why? Because they could be bought out. Nobody's buying out Microsoft. It's too big. So how much time do we have left here? 6:48. Go to some comments, and we will take a moment. We'll go over some charts. NWL. All right, you got it. Durham. I went over Durham earlier. Durham is a madman. He's doing a good job. Hey, Rick Rubin, thanks for the super chat or super sticker. I don't even know the difference, but thank you very much. Pair character stretching is. Oh, they don't even show that I'm using. They don't show the character. I guess you guys could see it. I don't see it on my end, but people in the chat box could see it on YouTube. I use special software; it doesn't carry it through. The Salty Army salutes you. Hey, shout out to the Salty Army. Love you guys. Love you. Yeah. Salty Army restream. Go to thesaltyarmy.com. They are restreaming tonight, Sunday night. Great guys over there. Great team. Love them. 480 shenanigans. Major indices need to breach the 21th moving average shortly. Short for now. Correct. Nerds rule. Yeah, definitely. PBR got more in it. Petrobras, very, very good company. It is correct me if I'm wrong here, that's a Brazilian company. I like the fact that it's not in the United States. It's down in South America. Just fact check me on Brazil if you would. Rick Roofing, exactly. Wait for full confirmation on bullish reversal and buy back in the new higher lows. Bingo. He gets it. What is this? I got this weird box that just popped up on me. Okay. What about DWAC Truth Social stock? It showed a little bit of weakness last week. Let's bring it up. I'm long it. I own it, but I own it for much lower prices. It reversed on the week last week, which I didn't like. With resistance at 88.39. I think that when we finally get a launch here, you're probably going to get a spike up on DWAC, and then it's going to roll over. So be careful. It's almost time for profit taking on DWAC. Remember, there's you buy on anticipation, you sell on the news. Okay, so if they spike it up higher the day that True Social launches, don't go chasing it. You should already be in now. DWAC is treated as very, very well. Crypto, BTCH, Ethereum, Minius. I'm going to go over Bitcoin in a moment. I kind of skipped that. It just reminded me. DWAC looks like a giant J curve. Yep. Bob, any life left in LABU? I love LABU. I love LABU. You know, you brought. So I closed out. We were selling puts, and I know Lewis was involved with this as well. We were selling puts on LABU, and the problem for me, the reason why I didn't roll the trade, normally I would just roll the trade into the following week, and that's why we had a profitable trade here, because I kept rolling, and the accumulation, the aggregate amount of the premiums that we pocketed over the course of a few weeks made this a profitable trade. What concerned me last week is that we couldn't hold 20. So, just as I mentioned earlier about the bear flag setup on the ARK fund, it's very similar to LABU. So, what I want to do, rather than roll out, I want to see whether or not, A, they gap it up above 20. We spend a few days consolidating above it this coming week. Then we could look to sell the 20 premium, 19 premium. But if they pull it back and we break support this coming week, I want to sell premium on weakness down at the 15, 16 strike, maybe even lower if we can get it. So that's the game plan. LABU, I still want to trade it, but we're going to watch and wait to see whether or not it is bottom. Trader Isaac. Durham helped bury his report by releasing news on the Super Bowl. Not smart. Yeah, that's a valid point. Read investors. Love it. Bobby, have you and your wife ever had C's candy? Is this a goof? Are you goofing on me? I don't think so. Are you goofing on me? No, I haven't. If that's a goof, you got to clue me in on it. Don't leave me hanging. All right. So here we go. My favorite spammer. I got to put you on block again. All right. Okay. Let's get to some analysis on Bitcoin. So back in 2000, I'm going to bring you back to this chart here. Right here. the Super Bowl 2000, you had Pets.com and a bunch of other no money making companies which had enough funding to be able to buy a Super Bowl ad. That was their last Super Bowl ad. So this Super Bowl, now you have companies, Crypto.com, I never heard of them. FTX Trading, I think I've heard of. Apparently they're running. I don't know this for a fact. I'm getting this off of MSNBC. Why I picked this one, I was last minute thing. I don't trust MSNBC, but I don't see a political gain or a loss for them here. So I'm using it. So fact check me on this, because everything they write needs to be fact checked. So they are paying up to $7 million for a 30-second ad. So that's kind of a contrarian indicator. And I'm concerned about Bitcoin rolling over. And the reason is, now it's down. It was up, now it's down. And the reason is that there are certain correlations on Bitcoin. It correlates very, very well with the CPI. But that correlation is breaking down short term. Why? It's because the Federal Reserve is raising rates. And Bitcoin trades with the CPI and is worried, Bitcoin traders are worried that the Federal Reserve is going to win the battle with inflation. They're not. They're not going to win. Not in the next 2 years anyway. Inflation is going to thrive. It also correlates with risk on assets. What's a risk on asset? High tech stocks. I'm going to take you back to this chart here. We'll go with the triple Qs, or we'll go with the ARK funds. This is getting ready to break down. If this breaks down, I suspect you'll get a risk-off trade on Bitcoin. Why? It's risk-off, one. Two, margin debt remains 60% higher than the historical norm. So if somebody gets a margin call, they don't have the cash in the bank, yet they have Bitcoin or Ethereum, they may cash out. I'm not saying they will. They may cash out, especially if, because it's a risk-off environment, crypto is taking a nosedive. Food for thought. How will I be making this trade? Look no further than MicroStrategies. Wrong chart. This is MicroStrategy, now in my own head. MicroStrategies versus Bitcoin and how they correlate. They correlate like on a daily chart, tick for tick. Tick for tick. You want to pull back, use more data. You want to use a monthly chart. Oh, sorry. This is wrong. I knew it seemed a little bit too tight. It's still very, very close, though. We're going to run over here, but I want to go over this. Okay. So the correlation is still very tight. We were tick for tick. We've come in some. Now we're 89% correlated. You know what? It's pretty goddamn close. Daily chart. Daily time frame. 81% of the times they are correlated. So with us, what I plan on doing is opening up a bear put debit spread. What does that mean? It means that we're buying the put option. We'll be shorting MicroStrategies if Bitcoin breaks down below this lower band of support. I think that this is a massive short covering rally, a bear flag setup, and that we're going to break. When am I wrong? If we close above 46,000, I'm wrong. It's probably not going to happen. So if we do break down below this lower band of support, where are we at now? We're threatening the 42,000 mark right here, right now. So the question I have, and I'm ready to have an answer tomorrow, is if we're seeing these companies, FTX Trading and Crypto.com, buying Super Bowl ads, how many traders are out there hoping for a bump higher on this very, very high profile advertisement for crypto? And will we get a sell the news event? Food for thought. Let's go to some charts. Well, I'd love to go over them for you. Yeah, choose your top one, pal. I can't. I'm already running over late. So if you choose one, I'll definitely go over it for you. C's is the best. Oh, so this is a real thing? C's candy is very high and chocolate. Oh, okay. I didn't know that. I thought you were goofing on me. Texas oil tycoons going into natural gas, burning Bitcoin mining rigs. Blow up the like button. Yeah, yeah, tell Bob, baby. Hit the like button, please. If you're just joining in, it helps me out so much with the YouTube algo. SJT, we'll leave it off at that. Will, if you get back to me that other trade or that other symbol that you want, I'll go over it for you. SJT. Let's do this. All right. LW for fellow member Jeff. Lamb Weston Holdings. We're in a downtrend channel. I want to take these automated trend lines off. So you may get another limp up here to this upper band of resistance this coming week, but expect a fight at that resistance level, much as what you saw the week of January the 3rd. Last week, I mean, if it doesn't get a follow-through week this week up to resistance and we trade sideways or even break down to a new weekly low, that's a very, very bearish event. And I would be looking to short this name on a breakdown. No sensitivity. All I care about is a close below that mark. And we're good. Daily chart. I don't like this stock. Again, folks, the power of the automated trend lines. Click of a button. We've rallied up to the upper band of resistance last week on a daily time frame anyway. Last week, we were rejected at that resistance level. I'm going to overlay weekly support and resistance levels onto a daily chart now to help bring them into the conversation, along with the daily support and resistance levels. Weekly chart. Bam. In dash line, we have weekly resistance, which is declining. I don't like the stock. I would avoid it. Stokes are rising, which is bullish, but I would not buy this stock here. I would have to wait for a pullback, or it would have to break out above resistance, which it doesn't look probable right now. So I would avoid this stock. And quite possibly a short on a breakdown to a new weekly lower low. SJT. Oh, San Juan Basin. Yeah. Throw up the weekly automated trend lines. A lot of support down below. I'm going to bring up the monthly overlay. No resistance on a monthly time frame above, but we're going to we're going to factor in our own monthly resistance or weekly resistance above. There it is. So you're going to have resistance up here at around 724 per share. I like the higher lows on Stokes. No breakout yet to the upside for higher highs, but we'll be watching it. So SJT weekly chart looking pretty good. Yes, it closed down last week, but it closed well off the lows of the week, so that's bullish. Daily chart. Good day on Friday. Lots of resistance here, though. I would wait for the breakout. And note on a daily time frame, the algo is picking up resistance here in blue at around $7 a share. So just beware that you have resistance above. If you wanted to nibble on this, I'd have no problem with you nibbling on it, but stay small, add more on strength. NEE. I don't like it. It's broken down. You got a lot of resistance in here. At around $79 a share, resistance. I couldn't buy it until we recaptured that support level. Daily chart. I don't like the daily chart either. Bearish reversal bar on Friday. I do like this. The Stokes are rising. They're flirting with the 50 mark. One way to play it would be this, is to wait for the breakout and or wait for the retrace down to 74.39 per share, give or take a dime. It doesn't have to be exact. Or wait for a breakout above resistance. So let's just do that. So let me do that right now. Touch, bounce, keep a little bit of sensitivity on, not too much. So I put a lot of emphasis on the stochastics, and when I see this high or low, while I may have a bearish gut reaction to the share price, I love the Stokes here. So it's worth watching and considering as a potential trade. Plus, it's in the energy sector. Energy's in fuego. This may not be a top tier stock, but it may play catch up with the rest of that sector. EQIX. Not sure what the symbol is. EQIX. I'm not sure we'll put that in there. If you could just confirm that that symbol. Tesla. Okay, so a while ago, about a month ago now, I was in a coaching session with, I don't know if he's on. Casper, if you're on, please say hello. With Casper. He's out of Europe, Amsterdam. And I said that if Tesla slips back below $1,000 a share, it's done. It's not going to see $1,000 a share for a while. I'm still of that mind. I got to clean this up. Let's get rid of all these, start all over again. Good. Woo, way too busy. Way too busy. Let's first go with the automated trend lines. See what they pick up. Bring up the monthlies as well as an overlay. Not much on the automated side. But all that matters to me is this, is that we're putting in lower highs and lower lows. Here's that $1,000 per share mark. I think that if we break down to a new weekly low on Tesla, it becomes a short. Why does it not let me create an alert here? Strange. Okay, we'll do it this way. We'll keep this active for a while. I think we will be involved to the short side on Tesla. It's very, very expensive stock. Daily chart. Now, it's clear that I'm bearish on the stock. When do we get out? Right here. If we close back above 952.27, 952.30, around the neighborhood, we'd have to consider stopping out of that Tesla trade. Now, the other thing that's disturbing here is that Stokes are threatening to put in a lower high. Very bearish stuff. So be careful of Tesla. I think it's going lower. Zim. Yeah, the last time I took a look at Zim, I was surprised to hear that this one had pulled back, because the last time I looked, it was a very bullish chart, but that was back here the week of the 24th. We got the continuation rally, more upside last week, but obviously we had some selling with an outside reversal bar on Friday. We have the 21-day moving average, exponential moving average down here at around 65.56, which corresponds with support. Let's bring up the automated. Yeah, okay. This is the other reason why I'm bearish. We'll come back to the automated trend lines. The 21-period moving average corresponds with prior resistance. Now, to further emphasize why you do not buy this stock right now is this. I'm going to throw up the automated trend lines. Here was your very narrow rising wedge formation we broke down last week. We may get a rally this coming week in an effort to try to recapture that support level. It'll probably get rejected. And if we break down to a new weekly low, expect that this support level here at around 67.52 gets tested. Does it hold? I don't know. I don't have a crystal ball. But if that fails, I would expect the 21-period EPA to act as some sort of support, ideally as it relates to prior resistance now acting as support. So I like, let's call it $65 a share. The algorithm is picking up 67.30. We could both be right. All right. So I think it goes lower. Avoid Zim. I like it longer term, though. You take a look at this macro chart. The uptrend is clear and defined, but it's due for a pause. That's Zim. Newell. Okay, let's go to the comments for a second here. AGFY. All right. So did Will get back to me? All right. So Will never got back to me. We'll go over AGFY. I'm going to shut down the request now, folks. AGFY, because I start losing my voice and it's not enjoyable for people. Haley. All right. Noel. It's not pulling up. There we go. Woo! This is a great looking chart. Great looking chart. This is a monthly chart. And what you're seeing here is a monthly breakout. We actually broke out last month. This month, we retraced the pullback. We retested what was resistance for quite a while, is now support. This is a very, very bullish chart. Check out your higher low. Gotta love it. Weekly chart. We blasted through resistance last week. We saw some selling at the back half of the week. What I think is going to happen here is that you're going to retrace down to 24 bucks a share. On that retrace, I would be a buyer of the shares. In fact, I just may get involved with it. Keep this active for a while. Loving the Stokes, higher lows. So it's building momentum. Hey, Bob, what about all the news surrounding mRNA? I'll put it to you this way. The rats are fleeing the vessel. Those are my thoughts on mRNA. EU investigation and the CEO closed his Twitter account. Yeah, if you take a look, TrendSpider has. Let me finish off with Newell, and I'll talk about some insider selling on Newell. Daily chart. Daily chart looks good, but again, folks, wait for that retrace down to 24 bucks a share. I like it at that point. I think the stock is going a lot higher. We're in early stages of a new bull market here. So Newell, very bullish on. mRNA, really quick. You know, from a technical perspective, it's looking okay. We've had a really big pullback, but we haven't put in a new monthly low. The month is half over. Stokes is still weak. Do we slip down below these support levels? You know, I don't know, but it looks like we're beginning to consolidate. The problem is that what you just alluded to. The CEO, they're under EU investigation, shutting down his Twitter account. And if you take a look, at the insider selling here, you have a dramatic amount of insider selling. These are the directors. These are the officers. No 10% holders. The guy who shut down his Twitter account, I forget his name. I think it was a CEO. It doesn't say anybody's position here as CEO. But yeah, it's very concerning, very troubling. We have no position in mRNA, nor do I plan on having one. Okay. PBR. Petrobras. A monthly chart, early stage breakout here. It's a buy. I love it. We've broken out of multiple resistance levels. Weekly chart, continuation breakout last week. There's more room left to run here. Daily chart. Again, there's nothing not to like about this chart. The only thing I will say, the only preface I'll put on this is just beware this Ukrainian news. If it comes off, if this becomes a nothing burger, expect a little bit of weakness in oil stocks, gold for a little bit anyway. AGFY. Agrify. I don't know this company. So Lee is making a projection here. I think Agrify is going to run. Let's validate your thesis here. Let's take a look. Monthly chart. Not a lot of data here. It's an inside bar, meaning no new monthly low, no new monthly high. Bullish. Weekly chart. These are the automated trend lines, folks. Weekly chart. They're putting resistance up here. I would be so bold as to take a slight exception with TrendSpider on this, the venerable TrendSpider, and say, I think that we have already broken out. I think that the momentum has begun to change already. This breakout here would be a macro breakout, a breakout above a primary upper band of declining resistance. This one here, this breakout is just an indication that, you know what, you're starting to see more buyers and sellers here, and it's getting shown on a weekly chart. They're starting to overcome resistance levels. So that's bullish, and it's reflected, magnified with your Stokes. So I'm okay with putting on a small position here. Actually, I'm going to retract that. Either A, we pull back to $8 per share, or B, we break out above $8.55 and we close there. Most importantly, we close there. I don't care if it's above 8:50 at 12 o'clock, 2 o'clock, at 3:55 Eastern Standard Time, it better be poised to close above that mark. If not, walk away. We'll keep this active for a while. I like the setup here. Agrify is a buy on those terms, though. Folks, thanks for being here. Don't forget, take advantage of TrendSpider. Use the 35% discount code below. I give it away free to silver and gold level members. Smash the like button. Subscribe to the channel. I'll be releasing our premium commentary to the public. I'll be unlocking it. So if you want that commentary, you got to subscribe to the channel. So please subscribe to the channel. I've already released last Monday's market wrap. Tomorrow I'm going to release last Tuesday's market wrap. And at some point in time during the week, I'm going to release not this week's, but last week's, the week ahead commentary. Why am I doing that? It's really not all that actionable. But if you're sitting there wondering, am I interested in subscribing to this guy's services? Take a look at what I'm sharing with my members. If you get value out of it, well, you don't even have to sign up for the 14-day free trial offer. Take a look at it. If you like it, well, you know what you're going to get partially. So when you join up, you're already used to the type of commentary that I share with members. So check it out. You are welcome, Lewis. I'll chat with you tomorrow. Trader Isaac, have a good night. Thanks, Bob, for your hardcore dedication and awesome real deal chat. Thank you very much for grooving. I appreciate it very much. Folks, thank you. Look at this, you madman. Thank you very much. Thank you. Folks, it's my honor to do this with you. I really appreciate you being here. And either A, you're not watching the Super Bowl, or B, I'm along with it. Jeff, you're welcome. Thanks for spending your time here. Have a profitable trading week, and please be careful. Keep some net liquidity on the sidelines. There's going to be a lot of great opportunities, but you need to have liquidity to take advantage of them. So with that, have a great night. Be well.